Is Ethereum Classic out of the doghouse? Ethereum Classic pulled back more deeply than almost any of the other cryptocurrencies that I've been tracking across my many videos. And as a matter of fact, it not only broke our 61.8% retrace line, which is the preferred minimum target on the A wave alone, but we actually broke down below the 76.4% retrace as well. That was our red line. That's where it says must hold here. That was supposed to be our minimum support, but we broke through it and we've been rallying since. Now, technically, by Elliott Wave standards, you can have a wave 2 retrace almost the entire distance of wave 1 without invalidating. Generally, it's not the most bullish sign, but we've had plenty of powerful rallies off of setups just like this across different kinds of securities. There's a bit of a debate whether this peak or this peak was the true subwave 5, but I've gone ahead and aligned this pattern with what we're seeing across all of the other cryptos, in which this peak was the third subwave, the correction was the fourth subwave, and our final top was this peak right here that hit its max on September 6th. Ever since then, we had an A wave, a B wave bounce, and kind of a slow grinding C wave to complete our wave 2 retrace. We've obviously gone deep enough and we're now back inside the box. And I do consider this a good lump sum buying opportunity. This chart alone, it's not as bullish. Right now we have what appears to be a 1, 2, 3, and maybe a fourth wave right now. Maybe the fifth wave has started, so we don't quite have a 5-wave impulse to anchor us yet. We'd like to see that and a 3-wave corrective pullback for a micro wave 2 before we launch. But I do still think it's a good time to buy. As a matter of fact, most other cryptos are showing a much more productive rally so far to end the correction. I would expect this to hold the 44.39 mark, 44.40, right around that range. We really shouldn't see this breakdown below that, and I would not expect to see that unless we saw all of the cryptos do something similar. On our big picture view, we can see that the MACD went well below zero and has started to curl back up, which is a typical sign of a bottoming being completed. We have the purple pattern as our primary at the moment. The green pattern that used to be here, the uber bullish pattern, is no longer there. I have decided that it is very unlikely we'll see an explosive rally as we saw with the green pattern right away. We may still hit those price targets further down the line, but we're not seeing the immediate setup for an explosion over the $300, $400 mark. Our rally so far looks like this. You have a wave 1 and a wave 2. And because of the shape of this, we could actually interpret this almost as a leading diagonal situation. We could actually look at this as the bottom, and this could be a zigzag up, 3-wave correction, and then you have a 3-wave correction down, and then usually with a diagonal pattern, you see a deep retrace, which we definitely saw in Ethereum Classic. It doesn't necessarily mean that it's a bearish prognostication. It just means that this should stick within a channel if we draw trend lines at the bottom and the top of this pattern. And oftentimes it doesn't mean we're going to go as high, but we've seen crazy things in cryptocurrencies. If we hold the bottom and we start rallying, our subwave 3 is targeting between the $150 and $185 range. And this is based on a logarithmic Fibonacci extension that I have posted right out here based on this 1-2 structure that we have set up. If we get to those numbers, if we get to 150, that'll be nearly a 3x return from where we are at the present moment. After that, expect a fourth subwave correction, which are typically sideways and somewhat time consuming. And then our final top for the subwave 5 would get us somewhere between $210 and $258, right in that range. However, as mentioned in previous videos, we have some strong resistances that we have to clear, one of which is the 0.382 extension resistance based on this larger 3-4 or 1-2, however we want to interpret this. That sits at 148. So we should be able to clear that to get to our subwave 3 top. The next resistance up is the 237 mark, which is the 0.5 extension. If we clear that, then we have liftoff to get us up to the 381 target. That 381 sits at the 0.618 extension, which is a very strong resistance, and I would not expect to be able to blast right through that right away. So my bigger return projection here is based on getting from where we are at this moment to the 381 target. That would give us a 7x return. We may see a fifth wave extension that is commonly seen across various cryptos. Big picture in the crypto universe, this top here should coincide with the major top we're going to see in Bitcoin and Ethereum. So what that means is that we'll have a big, nice top here, should have a dramatic correction that may last quite a few months, maybe longer than that. But while Ethereum Classic and some of the altcoins will have a somewhat moderately severe pullback, Ethereum and Bitcoin may crash really hard. Again, that's a major fifth wave top that I'm expecting those cryptocurrencies. That's based on the entire 10-year history, the entire cycle of those two cryptocurrencies. Longer term, if we do pull back in a fourth wave and rally, we could see our 1700 plus targets, but further out in the future. Right now, let's focus on the subwaves here and wait for the consolidation. At the point at which we get to this subwave 5 or this top, that might be a very good time to take profits, at least sell part of your position and wait out, maybe reallocate those funds into other investments while you wait out the crypto correction. But we have plenty of hurdles to overcome before you can think about that. So if you enjoyed my video, please remember to like and subscribe for my ongoing Ethereum Classic updates. Until next time, thank you for watching and happy trading.